Hello, everybody. I'm Jeff Marks, filling in for Catherine Ross, and I'm here live in the New York Stock Exchange. And I'm here with our Real Money reporter, Kevin Curran. Jim Cramer's out all week. Kevin, got a wild day in the markets today. Everyone's kind of reacting to the China retaliation, raising tariffs on some U.S. goods. And this follows last week's news of the heightened trade tension escalation between the U.S. and China. It's between the country's two largest economies in the world. So with these tariffs in place on $60 billion in goods that China plans to impose on June 1st, how should investors react to today's news and to the market?
Well, I think it's important to kind of frame it. I think that investors got a little bit carried away into the first half of the year thinking that we would have a deal around this time, and now markets are reacting, maybe caught by surprise a little bit in the last week, saying that no, there's not going to be a deal, there's going to be a 25% tariff on Chinese goods, and then China, of course, has to retaliate this morning. And I think what investors should do is look back at what happened last year and maybe not panic as much as the markets are suggesting, because, for example, if you sold out of a company that was severely affected by tariffs like Apple, when things got at their worst, then you missed a 45% run to the upside. So I think that this is a president that clearly wants to bank his re-election campaign on the market, and if you're thinking that he's not going to let markets slide as consistently as they have the past week into 2020, then there's room to kind of wait it out, and hopefully there'll be some kind of deal where he can spring the market back up, because that's going to be one of his main platforms in 2020.
Yeah, and I think you make up a great point, is that one thing that we've seen before from last year, as you called out, is that President Trump often looks at the Dow as kind of his indicator of things, and within the Dow, some of the three stocks that he looks at are Apple, Boeing, and Caterpillar. Which brings me to Apple, which just happens to be Real Money stock of the day today. Stock's getting hit off tariff news. It's very heavily exposed. So my question, Kevin, is how will the tariffs impact the consumer as it relates with Apple?
Yeah, so I mean, this is kind of a catch-22 for Apple, because they can either eat the cost of the tariffs and hypothetically get their earnings crunched on, or they can pass it on to consumers, where people have been worried about their iPhone prices being too high and potentially softening demand there. So I think it's kind of a tough situation for Apple, where there's really no good solution. And we saw that happen towards the end of last year, where they said that China was responsible for 100% of their pre-forecast. So I think that it has room to gap down, and also looking at the charts on Real Money, which we have, there is some room for it to fall still today, which is a little bit of a bad signal for people that have been holding it amidst its run.
Yep, that's great, and we'll have to see also how they come out with the supply chain as well with Apple. And Kevin, you'll be following, covering Apple all day today over at Real Money with you and your team over there.
Yeah, absolutely. So we'll be looking at it from a historical perspective into 2018 and what we could have seen as lessons from its reaction to Chinese pressures, as well as some of the things that it might insulate it, like the services segment that are certainly one of the more bullish theses among analysts that are targeting mid 240, 250 price targets, which might seem overly bullish at the moment, but if they can shift that from 60% iPhone sales to more of the services generation, that's going to be protected from those supply chain pressures that they're seeing from China.
That's great, and even with all the trade tariffs and the headlines today, we still have corporate earnings this week, and we have a couple companies reporting all through the week. And the first one I want to touch on is Take-Two Interactive, who will report after the bell today. Any thoughts on Take-Two? I know you covered Electronic Arts last week for Real Money.
Yeah, so I think that EA is actually a good setup, because the demand for their products seem to be good. If you look at the bookings, which is a key metric that we want investors to look at for video game companies specifically, it's showing that the consumer demand for these type of leisure products is good. And I think that a lot of these companies are based on pipeline, though. So what I really want to see is more development of Red Dead Redemption 2 as far as online spending and monetization of that product, as we saw with GTA in the past, and then get a look ahead at what's coming up. I mean, I know that a lot of people are looking for GTA 6 in the future. I'm not expecting that to come out or any announcement today, but we can get a type of bird's eye view of the pipeline ahead in 2020, 2021. That would make it a lot more stable for investors to play, and I do trust that management team.
Yeah, and everyone always likes to talk about Fortnite when it comes to these gaming companies and how it's impacting business. But Take-Two's been one to say it's been an expander of the category, so we'll see if that still holds true. So I want to switch gears now to another company reporting this week, and that's going to be Ralph Lauren. They're going to report after the bell, I believe tomorrow. So any thoughts on Ralph Lauren as a apparel company now? But before when they report?
Yeah, well, I mean, it's somewhat of a turnaround story still. I think that when I was looking at some analyst notes and speaking to some people this morning, what it's talking about is controlling that inventory channel. I think it's really important for them to say that they've controlled the inventory, because I like to think of Ralph Lauren as they're selling sort of Veblen goods, which means that basically the more cachet the products have, then they can increase prices and get more margins there, and their margins are extremely high. So if they can continue to control the inventory, then they control the prices, then their margins go up, and that'll be, a positive turnaround story for the stock heading into the long term.
Over at Action Alerts Plus, we've actually had Ralph Lauren as a bullpen name of ours. We've been watching it for quite some time now and tracking this turnaround that you speak of. We have an interest to see on how they would do tomorrow. And then lastly, Tilray reports after the bell, and everyone has an eye out on these cannabis companies.
Yeah, well, I think that Tilray, it'd be hard for anyone to say that they know for certain what Tilray is going to do. They have some high-profile partnerships like Anheuser-Busch and Novartis, but the question is, they were trading at $300 per share last year during that short squeeze in September, and now they're down to in the mid-40s. So the question is, this is extremely volatile, and it's still trading at 100 times price to sales. So is that really any more value than you were getting in the first place? So I think that that's a very dangerous stock to play, and I think that there's a lot of better names in the cannabis space. Canopy Growth with its distribution partners, and obviously multi-billion-dollar investment. You could look at Aurora with Nelson Peltz coming on board. They're just safer plays in my view than Tilray.
Yeah, and when you see sort of how these new IPOs are reacting, Uber today, down the last time I checked heavily. So there's just a lot of these like new companies, kind of price to sales maybe not there yet, exactly in line.
It's exactly that 1-2 punch that Jim was talking about too. We have Uber coming and it flops massively, and then we have China troubles. It's just not a great environment at the moment.
All right, thanks, Kevin. That's all the time we have for today. We have more corporate earnings that we're going to actually discuss on our Action Alerts members-only call, so we're going to jump onto that next. And thank you for joining us today, and we'll see you tomorrow.